guys, and glad to have you on board again today. We're going to make a quick update on this Monday, first day of February. So coming out of what's been said into the weekly update, we have a little bit of a rebound on the first trading exchanges of this week. Instead of gapping down and accelerating last week's downside, we're kind of looking for some consolidation. So of course we're getting into the starting point of February, and as we've seen, this is a doji candle closing lower than the open point. So these rebounds are totally expectable at some point. What I'm looking for is actually trying to unpack whatever the hell is going on out there, because there's plenty of information to decrypt. The first one being that we still have what looks like being a temporary market top out there, so I still tend to believe that their probabilities will get higher than that later down the road. Consolidation seems the most probable stuff in between. We're going out of a very long and painful pain trade for the bears, which was basically drying out of liquidity and going previous resistance as a support, because whoever sold has to buy himself out, and so on until we actually find to fuck up a support, which is what happened last week. So until then, what we've had is volatility alert, bullish activities but no supports, bullish again but no signals. So it feels like bears are buying themselves out, which is totally understandable. Once again, we're having a lot of volatility alerts and we feel like we have a visible range structure. Okay, so let's talk about all of this all summed up together. So it seems like we have a range. Okay, sure thing, I can definitely see it. Okay, and we're definitely buying the dips as we try to go volatility boundaries anytime we try to go lower. Okay, so in that perspective, we have a mature range, 1, 2, 3, 4 bounds. Okay, it has been a bearish range, so there is a third range boundary in here. And in these structures, either like feeling like we are rebouncing, okay, so we had two options. Either we were extending this as a trend, okay, and the second leg would have been much deeper than the other. Though in that perspective, we're going to have to fail in here, okay, and not retrace to the trend channel. So first option is we find some reverse trade activity in here. 15-minute or 3-minute has to be traded with a bear trending signals, okay. So we need to see trending signals on the reference trend channel. And if such a thing happened, then I suggest we're going to go right down to the next support. 3,500 seems to be an appropriate target area, okay. It's not necessarily a level. If we fail under this level, then there is just a single opportunity, which is normally if this mature range gets retraced, then we're going to have to test the previous third range boundary and find a selling signal nearby. So that will give us a speculative third range boundary level on this higher time frame, which is probably going to be H4, but hasn't been reversed. So it's just retracing to the previous third range boundary and failing there to extend the range on the larger perspective. So I wouldn't be a buyer in here. Normally breaking a third range boundary in a trend is a trending opportunity, but I don't really think that this one worth it. Remember the plan. I am now switching to bearish opportunities because of what we've had on the monthly chart. So if we get there, I'm bearish again. If we show some bearish signals in here, I'm bearish again to extend to the downside. But like I said, S&P 500 isn't my favorite asset. I'm mostly looking at the Russell now. Okay, so that's pretty much all about it for stocks. I still trade as long as VIX hasn't been breaking its trend line, but I know that I need to be real cautious with that as well. Okay, so I don't know what it's going to come next. Could definitely be a triangle range, but I suspect an ABC structure should show up. But first of all, we need to break this trend line. So I will maintain bearishness and bearish pressures on stocks until we get to break this. And of course, I'll be real cautious. VIX still hasn't traded, but we'll get a new context box below. So anytime we dip a toe into this context box, we need to get the fuck out. Okay? So don't be over bearish on stocks, but there's still some limited but existing potential in my personal opinion. Okay, next, cryptos. I don't know what's really going on. I am managing myself into some arbitrage trade. which means I don't know shit about what the Bitcoin is going to do, though I'm not trading this guy. Ethereum could be showing some weaknesses. We had some taking profit validated patterns out there, and the market seems to be trading these. So we'll see if these taking profits will pull us right back to previous supportive areas, yes or no. That is still, in my personal opinion, a 4-hour chart context battle. We definitely can see the resistance, and don't forget that these context boxes are supposed to emulate trendline drawing, automatically speaking, with an acceleration factor and so on for the trends. But they basically, I think the 4-hour chart context is the one that matters this week, because it's the one that represents the most what I think the market is trading at the moment. So it is a simple choice to me. H1 would be dealable as well. It's really most about the fact that either we're going to break over the previous trend lines, looking possibly for what I talked in the weekly update, possibly these things, and I think trying to go overwhelming the 4-hour context, so that will give us a target above 1600 this week. Option number 2, we actually break below these moving averages and we deteriorate to create a consolidation, and in that perspective we're going to look for the previous support, so 1100 or possibly even 1000 as a target area. I doubt we can actually sustain prices far below support, so normally targeting these supports is where I'll start locking gains on my personal cover trades. All right, despite that, Stellar Lumen, I got myself in here at this 4th range boundary, speculative entry, just to be sure that if we break the triangle, I'll be in. So we got this 3rd range boundary approximately here. Hard to say where it is perfectly, but we need to break the trend line as well. So that gives us a breakout expectable area of 0.34. If we manage to break up, then I'll go for a fully sized position. I basically got in halfway, okay, and halfway in as well when we break. This is a speculative entry, okay, 4th range boundary is an experienced trade, so I don't want the beginners trying to copy me. I don't know what the hell's happening with Ripple. All I care is that we are making some kind of multiple closes outside of the dome zone, so that seems to be not that bad. I wish I could get a daily candle close there, so we'll see. If today we'll manage to close out there, that would be good. Looking at the context boxes feels pretty stupid, of course. So as you can see, resistant boxes are folded, which means that a resistance is building itself out there. So I wouldn't be too bullish on Ripple, but I wasn't bearish either in the first place. So it feels much more like we're going back to where we were before. Nothing too fancy with that. Still bullish on IOTA, waiting for this guy to retrace to the breakout area and eventually succeed or fail. I don't know. Okay, then WTI, hell of a trade, still in, questioning whether or not we're gonna get to confirm. So we've tested the first support, so now we're totally flat. We have mature ranges. I just don't know what the fuck this market is doing. It feels totally wrecked. But still, okay, we're going flat. Everyone see the long-term channel in here, 45-degree angle, totally stupid trading. So if that's the future, then we'll get to retrace one step higher. In that perspective, looking for invalidation level, I think I've financed the stop loss for 56 right now, so we'll see. If we go higher, we can go 55, that's no big deal to me, of course, but I would still prefer this market to just simply reverse. But it still doesn't do it. So I need to get confirmations by breaking of a first support to reach out the next targets. Until then, it's just Schrodinger's cat box. It's not invalidated, it's not validated. And anyway, going against this bullish trend is for expert traders only. Gold, I'm still looking at buying this guy because in here, more of a trend follow. It's more like, I know one of these two guys is lying. I just don't know which one. So I'm getting open-minded, okay? If we go for a bullish stock market, I think gold has no other option but to follow. And if we deteriorate the stock market, then USD WTI has no other choice but to consolidate. So these are not fancier trades, but just whatever can be done. Then XAU USD, whatever the fuck is going with this, I can hardly express how that doesn't really interest me. It's more about we're trying to go for some longer term trades. Let me just go for a longer term chart. So it's really the new thing about Wall Street bets and stuff like that. And well, they're saying this price is manipulated and they want to come up for those who are trying to manipulate the price, whatever. Usual stupid bullshit conspiracy theories. Feels like the QAnon guys just moved to another direction. But anyway, if they want to use their $600 check in this thing, maybe, well, they're free to do whatever they want. In my personal opinion, I'm not going to buy a resistant context. It's just that prices are not interesting anymore to do such a thing. But are we going to break it? I still believe we have reasonable probabilities to do such a thing. We have a breakout target in here, which means I think limited upside potential. I wouldn't buy for this. I doubt this is a trend breakout simply because there is no preceding range, whatever. So what I think it is that we first need to reverse that, eventually trying to go one way higher, reversing this context, and later on, in order to buy, we're going to have to buy the 50% context limitation. So remember, we don't buy in the top 50% of a channel, and so on. So I'm going to wait for attractive prices. More importantly, you know that these metals and stuff like that tend to trade wave 5 extended, which means I need to see a fucking overlap. And as long as we do not see one, I'm not willing to jump on board. So I see absolutely nothing like that at that point. There is the COVID low point, which still is doubtable personally. So I think this is the first resistance level. Okay, I wish I could see a mature range out there first and then later on going down. So I think in here we're looking for a market top, third range boundary, and if we get one, then later on we'll get the overlapping structure and I'll be willing to buy the breakout. So it feels a lot more like this is not the appropriate timing, but we live into stupid times in which people gather together and think they can change the world. So these things happened in the past, okay? Don't get me wrong. I've said stupid things can happen, but of course, I mean, we have several examples in the past in which people gathering together found some silly strength, but still very surprising one. So I wouldn't fight against that, don't get me wrong. I mean, going against these Wall Street bets or whatever that really is behind that is more like, well, in my personal opinion, they're not totally 100% false. There's definitely be something with asset pricings in metals, and prices will not necessarily reflect the reality, but still, this is reflecting offer and demand, whoever is altering it anyway. So it feels like the little guys are trying to fight the unlimited money and unlimited pockets, which still leads me to believe that even though they have some reasonable strength, they're still fighting kind of a fighting against the wind. So well, I'm just setting myself aside from it. There might be a lot of volatility and I'm not willing to go down this road. So silver for me, out of the game, not meaning that it won't provide gains or losses to whoever's trading it. Just feels like it's not worth it to me. Okay, forex, totally boring, but AUDNZD could provide some interesting stuff this week. We'll have the RBA on Tuesday, if my memory's right. Yeah, RBA interest rate. And employment chance on the NZD. So it's basically Tuesday is going to be a swing day for AUDNZD. So big question, we are trying to break to the downside. Does that mean we're getting some of the interesting prices, because moving averages are still bullish, contexts are so bullish. So I'm really thinking about the prospect in which this market could give us something that worth it. So I think it's eventually an entry point for those who do not have AUDNZD at all, okay? And for others who already bought the lows and stuff like that reinforced, we just need to stand by, okay? These are the areas we care about, right into the down zone, which is right in here, okay? So we need to be patient, okay? That's really the key element. We could be trading in there for a long time. This is my asset of the year, but most importantly, my asset of the forthcoming years. So first of all, if we had to spend some time into the down zone in here, I wouldn't be surprised. You just need to cross a line, okay? There is just an absolutely impossible buying entry on top of 1.07 because that's the mid part of a range. And remember, we don't buy in the top area. So it's more like if you have absolutely not a single trade on AUDNZD and want to consider eventually one, you have to be aware that this is trading prior than an event, so could go some volatility later on. But with a large stop loss, I think that's the kind of position that might be worth it. to keep it, and you'll have an accumulation trade preceding a potential breakout. Okay, so that's more about it. I think we're going to accumulate in here before preceding a breakout, but it's more like a question mark on this one, so limited position sizing and only for those who do not have that yet. All right, I think despite that, that's pretty much all about it. I'm questioning whether or not stocks will give us some more bearish signals, and in that perspective, I'll reinforce my ample positions. I got back in, of course. So the question is, do I reinforce now, or is it a bit too soon? I think it's still a bit too soon, but could come out later throughout the week. I'm still questioning a first entry on Amazon as well, but the structure hasn't broken yet. I'm still bullish on Virgin Galactic because I see absolutely no reason for this one to reverse, but could show some volatility in the short term. But we are breaking up, and the breakouts still looks like they're going to be confirmed. Okay, I'm still questioning whether or not I'm going to short sell Tesla. I was comfortable doing so when I was a buyer on the opposite end, but as I profit took my entire shares, I don't really fancy going bearish on this asset. So, well, I'm questioning. Maybe I'll do it, but so far I'm not convinced. All right, that's pretty much all about it. Bye, guys.